You're listening to The Real Estate Way to Wealth and Freedom Podcast, Episode 19.
Welcome to The Real Estate Way to Wealth and Freedom Podcast with Jacob Ayers, providing actionable content to help you along your journey to financial freedom through real estate investing. As the premier asset class, real estate has helped ordinary people just like you amass fortunes. The benefits of passive income from real estate investing will allow you to live a life you want. And now your host, entrepreneur, real estate investor, and apartment deal syndicator, Jacob Ayers.
Hi, and welcome to the Real Estate Way to Wealth and Freedom Podcast. I'm your host, Jacob Ayers. Today we're going to be discussing analyzing deals and making offers with our guest, Michael Blanc. Michael is a serial entrepreneur. He has a master's degree in computer science and spent several years working for larger companies, including AOL. Michael joined a software startup and was involved with taking the company public. Michael then opened a number of pizza restaurants before he finally started investing in apartment buildings. Now Michael and his asset management partners control over $58 million of real estate assets. Michael is a passionate coach who loves to help people do their first deal. He's also the host of the popular apartment investing podcast with Michael Blanc. All right, today we have on the show, Michael Blanc.
Hey, thanks for having me. Appreciate it, Jacob.
Michael, it's our pleasure. Thanks for coming on the show. So can you start by telling our audience a little bit about yourself and how you got started investing in real estate?
Right, sure. Yeah, so, I did kind of like a lot of people were taught to go to school, get good grades, and get a good job. And so it wasn't until I was 35 until I actually realized that I was an entrepreneur. And it really, the thing that helped me realize that was reading the book Rich Dad, Poor Dad, and it just really slapped me upside the head. I thought I was a pretty smart guy and had it pretty figured out. And after I read that book, I was like, I can't believe how off I was, just my entire financial outlook. And, after some time, I'd say not a long time, like 6 months, I decided to kind of throw away my entire, computer software background and really pursue with a passion this whole thing of passive income. And I kind of did what Robert Kiyosaki says in the book, which is you should have a cash flow business and or real estate. Because I had made some money through a software IPO, I decided I was going to do both. So my real big idea on passive income was not real estate, actually. It was restaurants, right? So I met a few guys who had a franchisee, and they said, oh, it costs this much to open a restaurant. Well, they'll hire a guy to run it all, and we just sit back and count our passive income. I was like, that's exactly what I want. So I got involved into a franchise, and basically that was my big bet, right? I was like, I had enough money to maybe finance 2 or 3 restaurants, and then it would be self-funding. I had a 20-unit plan. Now, it didn't turn out that way. Actually, instead of sending me to retirement, it did work for about 7 years, but instead of sending me to permanent retirement, I ended up losing 95% of my net worth through that experiment. So that didn't work so good. On the real estate side, though, it was a lot better. So I started flipping houses, and that was excellent. And we really got into it pretty big in 2009 to 2013. Very unique market. We flipped about 36 houses there. And that was really neat, but the problem is there was nothing passive about it. And so that's kind of when I started scratching my head going, well, this multifamily thing looks pretty interesting. And I started looking into that and started doing some deals. At that point, even for the houses, I didn't have any more my own money left. It was all deployed in the restaurants. So I had to essentially start raising money if I wanted to do anything. And so that's kind of how I got into real estate.
So Michael, you really got into this game through single families and flipping homes, but now you're really focused on multifamily investing. Could you talk a little bit about the differences between single families and multifamily investing?
Yeah, I mean, the thing is, the main reason we all do single family is because everybody talks about it, right? We live in houses or rent houses. It's something we have a comfort zone around. So if one were to go out on our own and do real estate investing, we do kind of we think we kind of do what the next logical step is. And in most cases, that's the best way to do it. You got to take one foot in front of the other, and this in most cases appears to be the first step. And so I was no different. Everybody around me was talking about single family houses. I had a mentor who was a wholesaling mentor, and he taught me how to direct market negotiate. And I said, well, you know what? I'm going to do it right. I'm going to do some rehab and forget this wholesaling stuff. But I really did what, you go to your local RIA and 95% of it is all single family house investing. So you're surrounded by this. And so you think that clearly if one wants to be a real estate investor like these 100 other people in the room, well, clearly I got to do what they're doing, which is single family houses. And that's exactly what I did. I sat down one day and I, put pen to paper. Actually, it was a whiteboard, and then I said, I flipped a lot of houses, got a lot of good experience, but every time, if I'm not buying, fixing, or selling a house, I'm not making any money, and that's not really what I wanted to do. That's not what's in Rich Dad Poor Dad, and it really irked me. I was like, man, I don't know, what am I doing here? So I said, well, why don't I just start holding some of these and doing some rentals? I said, if I buy right, this is the Washington, D.C. market, Maryland. If I buy right, I can probably make a cash flow $200 a month. And that's generous. But let's say I can do that. If I want to replace my income of $10,000, I'd have to have 50 houses. And I was like, good grief, 50 houses. How long is that going to take me? I mean, even if I do a dozen a year, and then how much work would that be? And I was like, oh my, you got to be kidding me. And that's when I remembered, the multifamily stuff. I did some seminars back in 2007 and actually did some work around multifamily. And that's when I went back to that and went, you know what? I had it all wrong. Let me go back to multifamily. And not only is it passive, number one, it's very easy to raise money for, but it's really something that you can scale, right? You can start with a duplex, and you can if you have someone managing it, you can layer over a 5-unit, then a 10-unit. Right, and you just layer it over, and once you've done the transaction, you put a good manager in place, you can just keep going. Where the house flips, you're always starting back from zero. And I looked at it, I studied it, and it's one of the least risky asset classes of any kind of investment, including the stock market that's out there. If you look at the recession and the record that multifamily had versus any other asset class, and you kind of go, my goodness, this is an incredible vehicle to generate passive income and long-term wealth.
Yeah, you're absolutely right, Michael. At the end of the day, everyone has to have a place to live, so that's one of the things that drew me to real estate investing in the first place, and in my opinion, it's one of the reasons real estate investing is the best asset class that's available to invest in.
Well, it is. I mean, there's advantages and disadvantages to single family houses, right? I mean, they're cheaper, so you don't need as much money. There's more of them, so it's easier to do deals. But really ask yourself, this is what I always ask people, so what are your goals, really? Well, my goal is to quit my job. I said, great. Well, what's your rat race number, right? What are your minimal expenses? Oh, they're, if I ate macaroni and cheese for a little while, probably $7,000, $6,000, $8,000, whatever the number is. And you're like, okay, well, let's work backwards from that goal. You're currently flipping houses, you're wholesaling, maybe you're doing a few rentals. How much of this activity would you need to do to accomplish that? And then once they start thinking about that, they're like, oh my gosh, either I won't ever get there, or I'm going to die trying, right? So then they're like, well, okay, Michael, I get your point, but what else is there? And I say multifamily, and they're going to go, well, I can't do that. That's an advanced strategy, and it's one that I will do once I get more experience and when I get a lot of money. And these are two major myths about getting started with multifamily that, within a few minutes I can dispel, and over some time, people can see that you don't actually need experience, nor do you need money to get started in multifamily. So why not go right at the strategy that's going to get you achieve your goals? And I have found that actually without exception at this point, and I'm curious to see your path as well, but I have something that I call the law of the first deal. And it goes something like this. If you do a multifamily of any size, you will be financially free in 3 to 5 years. And it's simply that someone gets into a multifamily, and even a duplex counts. While it's not technically a commercial real estate, even a duplex counts. You get yourself in a duplex, and the second deal is likely going to be bigger than the first. And most people I have observed within 3 deals have replaced their income, right? So if you're replacing, for example, I had a UPS truck driver. His rat race number was $4,000. And his first deal was a quad, and he bought it with a hard money loan because it was vacant. Then 4 months later, he refinanced it, pulled most of his money out, and did it again. And at that point, after 8 units, he had 2 quads. It was $1,800. He was halfway to his rat race number, and he was working on a 10 unit, which would have taken him out. So consistently, even a few people I've had on my podcast, within 3 deals, within 2 or 3 years, they've replaced their income. And it's incredible how universal that law of the first deal is. And that's why I focus all my efforts in educational and training and blogging on the first deal, because it's so powerful.
So, Michael, you're saying that it's possible to get started investing in multifamily properties without already having done a deal. Can you talk a little bit in detail about how that's possible?
So first of all, there's two major objections. One is I don't have the experience, and number two is I don't have the money.
Right.
So let's talk about each of those kind of in sequence. So one of the things that surprised me when I started, and I had flipped three dozen houses, and I transitioned into multifamily. And I was surprised in two ways. Number one is the professionals I dealt with on the multifamily side really didn't care how many houses I flipped. They were like, "Yeah, but how many multifamily have you done?" I was like, "No, but look at all the experience. Look at all the houses I flipped," and they could care less. Literally, it counted for nothing. And then my investors, many of them were not interested in multifamily as well. They just liked a small investment and a six month turn. So I'm like, son of a gun. It's like, aside from being interesting and learning a lot, it didn't really set me up. So that was my first lesson. And actually getting into it, the biggest objections is the experience level. Well, that's true. If you don't have a track record, you don't have experience. If you haven't done a multifamily, you can't point to a track record. So there's two ways to address that. One is, first of all, by educating yourself so you don't sound like a newbie. And that can be done by reading books, attending seminars, doing online courses, that kind of basically increasing your vocabulary, your skills, and with it, your confidence. And then the second thing is, if you don't have the experience, then surround yourself with a team that does, right? So instead of talking to, oh, poor me, you talk about in terms of your team. Well, what's your team? Well, experience. My property manager manages 1,100 units in Richmond, and my board of advisors collectively owns 750 units. And very quickly, all of a sudden, the person listening to you goes, "My gosh, this guy surrounds himself with a really amazing team with a lot of experience." And so, in other words, with a little bit of knowledge, what to say, and a team around you, you can appear much more experienced. In fact, I observe this with people who just get started, and they go to the local RIA, and they're like, "Oh my gosh, I'm meeting with potential investors, and they're immediately asking me about my track record, and I just feel so stupid, And I said, well, let's just go ahead, learn to analyze deals a little bit more, get a little more into the online course or whatever you're doing, and then when 6 weeks later they repeat the experience, and they're like, you wouldn't believe it, I wasn't even asked about my track record. And it's because they have this vocabulary and this confidence about them, and no one's even asking you for experience. No one's even asking you for proof of funds because of the way you talk. So that's kind of the first critical skill to develop is, don't sound like a newbie, and it's fairly easy to overcome if you kind of have a little help with that. Does that make sense?
Yeah, absolutely.
And the second one is literally, if I don't have any money, which most people don't for this kind of thing, is to learn how to raise money. And this was a huge eye-opener for me after I deployed, basically my entire net worth in these restaurants, and I wanted to go flip houses. I didn't have my own capital, so I just kind of cautiously asked people, "Hey, would you be interested in investing with me?" And someone was stupid enough to say yes. And I was like, wow. I was like, that is so I just this went through my brain. I was like, well, let me get this straight. My ability to flip houses is only limited by my ability to find more people like this and find more deals. And that was just mind-boggling to me. I mean, I had about $1 million deployed at one point on single-family houses and without using any of my own money. And that's just huge light bulb went off. And I see it in my students that I work with, and I teach raising money, of course, but it's really difficult to sometimes wrap their head around it, but it's not really that complicated. It's just something you have to be persistent with, and you're intentionally building relationships with people to the point where you ask them, if they're interested in partnering with you on a deal. And when that first person says, yes, I'm in for $50,000, I mean, something flips in people's heads. They're like, huh, that's interesting. And it just boosts their confidence level to a whole new height. And now they walk with their chest higher, and the next person to interact with, are much more confident. All of a sudden, very quickly, where it might have taken them 3 months to get that first commitment, it takes another week, and they got the second person. And before you know it, they have $250,000 raised for their first deal. And it's just mind-boggling that you can do that. And so learning to raise money essentially allows you to scale as much as you want to. You're not limited by your own resources or your lack of resources. So those are two things that one can overcome in a fairly short time period, and one can go right after the first multifamily deal.
Yeah, that all makes sense, Michael. So from a beginner's perspective, raising money seems really daunting. So taking a step back and just realizing that you can take small steps to get to that first deal, and then after that, your second deal comes that much easier, and then it just becomes easier and easier as you go.
It does. It does. And I think one thing about raising money is that you're not really raising money. You're building relationships, right? In fact, when you first set out, you shouldn't be leading with raising money. You should simply start out by revisiting, refreshing the relationships that you already have. And you're sharing your excitement about multifamily investing, and you're keeping them informed, and you really just want to get their support and share your enthusiasm, and just keep the dialogue open and be a little more intentional with it. So it's not just, well, you'll see them whenever you bump into them, but it's like, you know what, I haven't talked to this guy in 14 days. Let me call him up. And you might be a little surprised that you're keeping up with them, and you might be sharing personal lives and what's going on. You give them update on multifamily investing. And if they show interested in and they're supportive, then you might say, hey, you know what, I'd love to tell you a little bit more about this multifamily thing. You want to grab a coffee or something? They're like, yeah, sure. And now you're chatting with him, and you got a little more time with the person, and the conversation is going well. And you say, look, I might be, I'm looking for investors as kind of return, minimum investment, so and so. Do you know anyone that who might be interested? And a lot of people know a lot of people, and they might say, well, shoot, I'm interested. Or they might say, well, my brother might be interested, or my boss might be interested. And all of a sudden now you have a referral. And that's really kind of the progression, right? You don't call up someone you haven't talked to in a year and go, I'm getting started with multifamily stuff. I'm looking for 100,000. Are you in? Right?
Right.
You're like the answer would be no, because you're crazy. So so I guess it's just being more intentional around your relationships, and just and just being consistent with the people that you're talking to.
Yeah. Okay. So Michael, backing up, can you kind of talk about your first deal and how you got involved with that?
Well, I had two runs at it. One was in 2007, where I took a boot camp and started marketing heavily in Texas. And I'm in Northern Virginia, so this was pretty far away from me. Sending at the time in 2007, this was before the recession, so the market was 2006-07. The market was pretty red hot, kind of like it is now. And so very little was listed on LoopNet. It was all about sending some letters, but mostly about brokers. So I spent a lot of time, basically doing what I preach now, is building a relationship with brokers and property managers, and did that for about 9 months. And after looking at about 150 deals, finally found one in College Station, Texas. It was 180. It was an 82 unit deal, and it was smoking hot. And I knew that because I had looked at so many deals. And right during that time, we got so busy with the restaurants. I think I was in the process of buying one and building one, and I had one under. I can't remember what it was, but I'm like, my gosh, I can't do all of this stuff. And in retrospect, it would have been much better for me had I stuck with multifamily through the recession. But that's sometimes how it goes. And then when I got started, when the dust settled a little bit after the recession with the restaurants, I finally looked up and decided to get back into real estate. And that's when I first did my first deal. It was a 12 unit in Washington, D.C., and it was brought to me by one of my wholesalers, my single family house wholesalers. And I wasn't really ready to get into it. It wasn't looking for it, but I was open to it. And and I just kind of went for it, and it took a long time to close, and it was a real utter disaster for the first, I'd say, year and a half. Now things are well, and I'm in the process of selling it, but man, it was a pretty rocky start.
Yeah, what were some of the things that went wrong with it?
Now, the major problem was a single tenant who wasn't paying his rent, but that wasn't the problem. The problem was that for some reason he wanted to make my life hell. For reasons I still don't quite understand, but he was calling the permit people. He was calling the permit enforcers. He was suing me in housing court every 6 weeks in 3 different dockets for the same 12 quote violations. He was calling the lead paint people. I mean, I had inspectors and law enforcement and all kinds of people crawling all over this building. And essentially what he was making me run out of money, because of all the compliance and repairs and fines and legal fees, I had a cash cushion built into the deal, but it was gone quite quickly. So if I simply multiplied what over the course of 8 months at that point what he had cost me, and said, look, in another 10 months here, I'm done. I'm going to run out of money. So I'll have to either do a capital call and call my investors saying I need more money to keep the lights on, or what, right? So it was a really, really stressful time for me. And fortunately, the tenant kind of stopped doing what they were doing, and eventually he stayed there for about another year, and eventually he was evicted. but it was a pretty rough start, and I certainly didn't feel like I was ready for that. And people looking in on it were like, "My gosh, I can't believe all these things that happened," because it was quite a few things that came together, all at once, and it was quite of a mess. But as with many things, a lot of people's first deals, if you talk to them, were really rocky in the start, and there was some question about if it's going to succeed. And with enough persistence, grit, and time, all of a sudden the deal stabilized and it turned out okay, which I think is the magic of multifamily. It's just, if you stick with it and give it some time, it'll actually it'll become a good deal. And so, now the deal is worth about twice as much for what we paid for it, which is great. So we're in the process of selling it now.
Yeah, right, Michael. So it sounds like you hit some adversity with that deal, were able to overcome it and still have it, and you've gone on to do more deals. Now, over the years, you've done several deals and you've become better and better at it. You've actually developed this tool called the Syndicated Deal Analyzer. Could you talk a little bit about how that tool helps you analyze properties and make confident offers quickly?
It's the first quote product I developed after I launched my website and started blogging. And because when I look back and when I started, it took me 4 hours to answer the question, what's the most I can pay for this deal and why? And when you're doing deals, you can't use 4 hours on a deal analysis. It's just way too much time. It's a numbers game. The more offers you make, the more deals you can do. And 4 hours were a really long time. Now, at the time, I didn't have the tools nor the technique I have now. And so the Syndicated Deal Analyzer is a result of looking at several hundred deals and getting the tool itself better. In other words, what I want to do is I want to be able to make my first offer very quickly. In fact, I call it the 10-minute offer. Once I get a marketing package in, I want to be able to make my first informal offer within 10 minutes of getting that package. So I need to be able to do some very simple things very quickly, but also I want to be able to use it for more sophisticated modeling the farther I get into the deal. And I wanted to be able to incorporate investors and et cetera. So the investor return is what drives a deal. It's nothing else. Yes, you need to be compensated, but really it's the return for the investor. So I need to be able to figure out what the return is for the investors based on changing various different variables. So because making offers is such a big deal, especially early on, obviously you need to make offers, but it's so key in building people's confidence. I see that when someone analyzes about 10 deals, their confidence level is really, really high. And like I said, at that point, when the confidence is high, you tend not to get asked for proof of funds and experience. And it's because of the outcome of analyzing 10 or 12 deals. And so that's why being able to analyze deals quickly and accurately is so important.
Yeah, this is a really impressive tool, and looking at it, you can really tell that you have a background in computer software because it's very in-depth, and it's really good. I mean, it helped to get my first deal under contract and make that confident offer. So, kudos to you. It's really useful, and I definitely promote it to everyone I come across who's analyzing multifamily deals because it's just a game changer. But, yeah, you're right. Being able to analyze deals quickly, you said it's a numbers game, and it's absolutely true. So, yeah, it's good stuff. So you not only have that tool, but you kind of have a little video series where you coach people about how to make that offer and, how to approach brokers and, analyze the deal and get it under contract. Could you talk just a little bit about that process from a high level?
About the analyzing and making an offer process?
Yeah, absolutely.
Which part?
Right. Yeah, analyzing and making an offer.
Right. So I think a lot of people think that making an offer is basically a contract or a letter of intent, something like that. The offer actually, a lot has to happen before that phase, and a lot of it happens informally, right? So it starts with the feedback to the broker. The asking price won't work for me. Here's why, but here's what would, and here's why, right? Essentially, and when you do that, you're not only providing feedback to the broker, which is key in your relationship with the brokers, but also it's essentially making a first offer. And being able to do that is something that, I have now a technique which I call the 10-minute offer. It allows you to do that. And before I was wasting so much time researching and itemizing, and it was all unnecessary, right? Because a 10-minute offer gets you in the ballpark of where you would want to start the negotiation. And if you get a counter offer or you're invited to put something in writing at that point, you can go a level deeper. And then maybe submit a letter of intent. So that's kind of the process. And it starts kind of easy, kind of low key, before you spend a bunch of time really getting into the weeds.
Yeah, and that's one thing to point out to those who are just doing their first deal is that first process of contacting the broker and making that informal offer is just that. It's relatively informal. You might reach out to the broker and say, hey, that number doesn't work for me. Here's what does and here's why from my analysis. And, you start to develop a rapport with that broker and you go from there.
That's right.
All right, Michael. So you've been investing for several years now. Could you talk a little bit about some of your other deals and what those look like?
So these days, after I had some success with the house raising money, essentially, people asked me how I did that, how I structured deals, and so I started, just sharing my knowledge. And at one point, it led to kind of, starting a blog. And so, I while I had achieved some success in this myself, I really wanted to kind of help other people do the same. I just started feeling so passionate about the power of multifamily to help people become financially free that my current mission right now is to help people do exactly that, is to help them quit their job, replace their income, become financially free with real estate, and maybe not in the way they think right now because it's not single family houses, multifamily. So I've started measuring kind of my success and how many people I help. The last year, I helped students do about 305 units last year, and this year my goal is 1,000 units. And I do that by a combination of free content, paid online training, coaching, and also a way to partner with people. So I have a deal desk partnering mechanism where people can submit deals that match my criteria, and then we engage with those students and raise the money for it. So, for example, we closed a 64 unit in Memphis, was brought to by a member of this program, and the deal looked good. We created a joint venture agreement, and then we moved forward, and I raised the money for it. The student stayed engaged, and we worked out a general partnership split. And now he has his first deal, and of course we've done a deal as well, and it helps everybody. So that's something that we're scaling up through the remainder of the year. This is a deal desk process, and we're actually working on some partnerships to help us really scale that up because it really has a lot of potential. There's people out there that maybe don't have the money but are really hustling to find deals, and as you know, finding good deals is a challenge right now. And if we can attract the capital, which we can, and we can have people working these deals together, we can help these people do their first deals, which is kind of what I'm all about, is that first deal.
Yeah, that's fantastic for helping somebody get started. We were kind of talking earlier about, not sounding like a newbie and appearing more experienced than you are. And I kind of call it the power of we, rather than, being alone and saying, oh, I haven't done a deal before, being intimidated. Well, now it's me and Michael, are partnered here, and here's our collective experience. So
that's right.
Carries a lot of weight.
That's right, exactly. And now the experience is taken off the table. Oh, I'm working with so-and-so. I have an advisory board of so-and-so. So, yeah, exactly.
Yeah, good. Okay, Michael, you've kind of touched on it already, but what are your reasons why you're doing what you're doing? It sounds like you're passionate about educating people about multifamily and passionate about multifamily itself, but what are your reasons why?
Well, so the reasons evolve, right? I mean, I've had now a certain amount of personal success. I've made a lot of money and I've lost a lot of money. And I feel like now there's always this we strive for success in life, and people who have achieved a certain amount of success sometimes look up and try to figure out how can I build a life of significance. And it's not so much about themselves anymore because they've already covered themselves. And so, I've kind of looking to expand not just my success, but how it can make a difference in the world. And I found that in order to have a conversation around a life of meaning or significance or purpose, I find what gets in the way a lot is money or the lack of it. So, if I'm telling someone, you got to really figure out what your purpose is, live into your passions. And they go, what are you talking about? I work 60 hours a week providing for my family. By the time I'm home, I'm bushed. I can't think about all these things. You're crazy, right?
Right.
And this frustrates me because I have experienced the ability to pull back from from the daily grind, so my mind opens up. I just brought on 2 coaches who just replaced their income with apartment buildings as well, and they're almost struggling with the whole mindset. They're like, oh my gosh, I don't have to go to work today. What am I going to do? And not only that, but what am I going to do next? And so all of a sudden their mind opens up, right? This entire space that was consumed with 99% of work or whatever it was, all of a sudden is gone. And now they're like, oh gosh, what am I going to put in that massive brain of mine? What am I going to do with this? And so I just think that if we can take this topic of money or the pressure to earn money off, it would allow people to open up their minds. And if enough people open their minds, we can potentially change the world, right? So we got to address the finances. I can't tell you, live into a life of significance and purpose and passion when you're grinding away providing your family, which if whether you're a man or a woman, whoever the primary breadwinner, that's your responsibility, right? You can't say, oh, I'm going to go sit on the beach today and meditate on things, right? You can't do that. And it's much more difficult if you have to take care of the finances. So this is one way to take care of the finances is with real estate and multifamily specifically.
Yeah, great. So your future goals, what are they with both real estate and helping people? I know earlier you mentioned wanting to help your coaching students, get 1,000 or what was it, 100? No, it was 1,000 deals this year, right?
And it's not just coaching students; it's everyone I touch. Look, okay. I mean, there's people who listen to my podcast and are inspired and go out and buy a 10 unit. Awesome, I've done my job. And then there's people who are paying, thousands of dollars for one-on-one coaching for the same thing, and they're doing their first deal. That's great. So not everybody needs coaching or online training, right? But it doesn't really matter to me. My approach has always been to provide high-quality free content, paid content, and a way to partner with people, whatever it takes, essentially, to help you do your first deal. And it could mean something different for every single person. So that's really my goal. So I just love hearing from people who have done their first deal, because I know once they've done their first deal, in 1-2 years, they're probably going to call me up and tell me they've quit their job, and then I have them on my podcast. So you're going to be next, Jacob.
Great. I'll look forward to it. Okay, so starting to wrap up here, we've got a fire round, Michael. Just got a series of questions we'll fire at you, and you just kind of answer from the hip. How's that sound?
Sure.
Okay. All right, so getting started, what was your biggest hurdle getting started in real estate investing, and how did you overcome it?
So probably at the time was lack of money, because I didn't have any. It was all deployed in the restaurants. And so obviously the way I overcame it was by raising money, and we just talked about that.
Right. Okay.
Yep.
All right, do you have a personal habit that contributes to your success?
I a couple years ago, I started kind of doing Hal Elrod's Miracle Morning.
Oh, yes.
Right? Mm-hmm. And I'm not really a morning person, and I read this book, and he says in there, well, you can tell your body that instead of 8 hours sleep, you can function just as well on 7 hours. And I had basically tested this before and concluded that my body needed exactly 8.5 hours of sleep. And I said, well, Hal seems like a nice guy. I'll put this to the test. And I told my body the night before, okay, you only need 7 hours. I'm going to bed at 11 and I'm getting up at 6, and I'm going to be just as fine as when I got up at 7. And sure enough, I got up and I felt pretty good. Now, this is not anomalous, but after about 5 days of this, and I didn't crash and burn on a Friday evening and fell asleep in front of the TV, I was like, there is something to this. So, I basically added a whole hour per day to my day, which is huge. And it's at that space where, you're not really bogged down by tactical, firefighting stuff. You're allowed to decompress, think a little more strategically. So it's really made a pretty big difference and gave a lot of clarity to things that are important, not just professional, but everything in life. Yeah,
I've read Hal's book before too, The Miracle Morning, and it really sets a tone for your day when you wake up and get the day started on your own terms and do things that you want and need. So yeah, it's definitely helpful.
Yeah.
Okay, do you have a favorite online resource?
Well, I don't know. I for real estate, I think one of the best real estate resource out there is Bigger Pockets, and obviously I'm a weekly contributor there as well. But you can find resources on any topic. I mean, any strategy, and the forums are excellent. They're really active. The networking is fantastic. So for real estate, Bigger Pockets is probably the way to go. Now for multifamily, of course, my website I think is probably one of the best ones out there. I have a lot of free blog articles and YouTube and podcasts, so free ebooks, a lot of stuff out there for anyone who wants to get started in multifamily.
Yeah, okay. All right, Michael, what book would you recommend to the listeners and why?
So on the topic of financial freedom, I recently read a book called Life on Air by Steve Cook. It's Life on Air, like millionaire, but Life on Air. And the reason I liked it, he's got a similar. He's got the goal of the book is the same as my goal, which is basically financial freedom, but his approach is a little different. And it's more about asking the question, what life do you want, and why not start living that life right now? So, for example, if you say, well, you want to be able to spend more time with your family, you want to be in a state of semi-retirement, well, why don't you could do that right now or in a very short period of time. And then you would ask, well, how can I do that? I said, well, if you want to be drastic about it, you could sell everything and live in a mobile home park, in Alabama. And you could probably live there for like, I don't know, $900 a month, right?
Right.
And then people go, well, I don't think I want that. I said, well, so you just told me you want to basically retire. But now you said it's more important that you live in your house that you currently live in and drive the car you drive. So which is it, right? So it's kind of a one of those, every time a book kind of changes, alters your mind about the way you think about it, I really find very interesting. So, Steve Cook's mission is to help people become financially independent. He approaches it from more of a mindset thing, maybe from a more of a cost controlling standpoint. And I interviewed him on a podcast as well, because I think the combination of his mindset and his cost controlling measures coupled with the multifamily is really powerful. It could theoretically accelerate your retirement to like 12 months if you combine the principles, and what I teach in the multifamily and what he teaches about you just literally living the life you want and making the hard choices now. If you did that, you could be financially free in a very short order. So I thought that was a very, very mind-opening book that I read.
Yeah, it sounds like a very powerful book. We'll definitely link that to the show notes. So
yeah,
good. All right, Michael, if you were to give advice to your 20-year-old self, what would it be?
Well, so since I can't do that, I'm doing the same thing to my kids, and that is really allowing them to think about being an entrepreneur. And I was never around entrepreneurs when I grew up, and so it never occurred to me to work for myself or create something, even though at the heart of who I am, I'm an action entrepreneur. I love it. I love creating stuff. I love growing stuff. I love creating order out of chaos and then delegate to someone to kind of manage it. I love that. But I was never aware that that's what I really like to do, because I didn't think that was an opportunity. Now, not everyone can be an entrepreneur. I get that. I mean, you do need your CPAs, you need your employees. I get that. But I think a lot more people would love to be entrepreneurs if they were given a chance. So, I would have set myself down even earlier and given myself the Rich Dad Poor Dad book and showed all different ways that you can create businesses so you don't have to work for a living unless you really want to.
Great. I think that's really powerful advice. And I think you've hit the nail on the head. A lot more people would be better off in this life being entrepreneurs if they knew it were a path that were possible. So we kind of touched on the beginning, Michael, how'd you get started in real estate? Well, I went to school, got good grades, did that typical route, and next thing you know, you're 35 and looking back and thinking, wow, I wish I was an entrepreneur. So, yeah, good.
Yeah.
Okay, Michael, wrapping up, is there anything else that you'd like to leave with us or any parting advice?
Yeah, I just want people to be just really clear about what they want. Like, really sit down. This is where that miracle morning really comes in, because what kind of life do you want to lead? And a lot of people, they tell me that what they really want is they want to control their time. They're not telling me they want to be millionaires. They just want to say they want their time back. They feel like they're a slave to someone else. They can't control their time. Someone else tells them how they spend their time, and it's normally at work. Be just really clear about your goals and what you want to do, and then construct a plan to kind of get there. And for a lot of people, like I said, it's not the pressure or the compulsion to have to work for a living because they can't control their time. And so if that's what you want to do, then look at the best strategy to help you get there. And like I said, I've done a lot of stuff. I've done software startup. I've done short sale negotiation business. I've flipped houses. I've held houses. I've done multifamily. I've done restaurants. I can tell you that hands down the best way to replace your income in the next 3 to 5 years is with multifamily. And it's something you can do without spending years doing single family house route. So if someone wants to get started with that stuff, I just encourage them to start researching the subject. And again, my website, themichaelblanc.com, is a great place to start to kind of look at those resources. And so that's my parting piece of guidance, is to strongly consider multifamily.
Okay, great. So our guests can contact you at www.themichaelblanc.com. And I know you have a couple resources there too, right? A couple free ebooks.
Yeah, they can download the ebook there. It's called The Secret to Raising Money to Buy Your First Apartment Building. And it's a pretty full ebook. that will really give you a flavor for how to go about raising money, how to structure deals, and will allow you to kind of visualize the process. So I think you'll find it very eye-opening. When you're done with that, again, you can spend hours probably perusing the resources that are there, and hopefully you'll get really excited about the idea, and you'll believe in your ability to do your first multifamily.
Yeah, absolutely. I've spent much time there, and there's, like you said, just a ton of great content. So I urge everyone to go over there. All right, Michael, well, wrapping up, I want to thank you for coming on the show today and appreciate your time.
Jacob, thank you so much for having me. I appreciate it.
All right. Thank you, Michael. All right, that wraps up our episode today with Michael Blanc. Michael has a ton of experience and passion for helping people just like you get started investing in real estate by teaching you how to quickly and confidently make offers and get your first deal under contract through his syndicated deal analyzer. Now, this syndicated deal analyzer is a paid product. You don't have to have this particular tool, but if you don't have something, you should go out and find something or build your own tool that helps you make those offers. As we talked about, making offers is a numbers game. You might analyze 100 deals, make offers on 10 of those, and buy only one. So think of it like a funnel. Well, that wraps up our episode for this week. I hope you're getting value out of the show. If you've liked what you've heard so far, please leave me a rating and review. Please subscribe to the show to be notified of new episodes. You can now find the show on iTunes, Google Play, Stitcher, Spreaker, iHeartRadio, and TuneIn Radio. We have some great guests lined up over the next couple weeks, and we're going to continue to interview guests who you can make a part of your own team. I'm going to continue to give shout-outs to people who review the show next week. I look forward to reading your reviews. As a thank you, I want to give you a gift. Click the link in the show notes to redeem your free Audible trial and free audiobook of your choice. And also, please let me know if you have any questions or comments. I'd love to hear from you. You can contact me at www.jacobayers.com or email me at info@jacobayers.com. Till next week, signing off, I'm your host, Jacob Ayers.
You've been listening to the Real Estate Way to Wealth and Freedom podcast, providing you actionable content to build your real estate empire. Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for personal advice. The opinions of guests are their own. Information is not guaranteed. All investment strategies have a potential for profit or loss. The host is operating on behalf of the Real Estate Way to Wealth and Freedom, LLC, exclusively.